And you say, with all this other criteria, and I have it up already, but why aren't you looking for something like a delta? What delta do you use? What implied volatility do you use? What implied volatility range do you use? The trick is, I don't have to. Everything in options works hand in hand. By creating this structure of going for the risk that I want, limiting it to how deep in them I'm going to not lower the expectations of potential profitability, and just other basic criteria that we showed. Look at my deltas. The deltas of my puts here are all between 0.54 is the highest on page 1 to 0.42. And our risks, oh, I didn't submit, did I? I'm so sorry, Jason. I didn't click submit search when we viewed that. Let me clear that out. Let's go to our submit search. There we go. That's more along the lines of what I was looking for. All right. So what is the range in the money you prefer for the married put structure? What is the delta that you use? What is the implied volatility or stock volatility? It's already taken into account. So again, pretty much the same. The delta here now goes from 0.57, 0.44 is the lowest that I see. Without restricting delta, it's already restricted because of the risks. Preferred risks, 6.6, 7.7, 7.3, 7.5, so on and so forth. Implied volatility or volatility on the stock, it's all within a reasonable range, isn't it? 0.2772 looks like the lowest. That 0.57 looks like the highest. Yep, 0.577. So it's not too restricted. It's got some leeway in there, but without even restricting implied volatility, stock volatility, I'm finding the positions that I want with the risk that I want. Okay, now, your main question. How do I know which stocks to look for? This is what we look for, and this is what 90% of the fusion trades that Ernie and I post are available there. We'll get to Sumner's questions on that in just a moment. Okay? Why do I keep doing this? Why this search? Do we ever adjust the search criteria? Do we ever change it? To the gentleman that I talked to this week on the coaching session about the naked puts, yes, I'm going to do further research analysis. Which one of these am I going to choose? That's discussed more in the blueprint. I'm going to go to the stock charts, the company information. I'm going to do my further due diligence. Toast is one that Ernie's in. I apologize. Which one of these positions do I have the sentiment? Do I have the feeling, voodoo or hoodoo, however you read charts? I know everyone reads them differently. What am I looking for? Something that I feel has the potential to move up 3 to 6% in the next 20 to 40 days, with the potential to move up another plus maybe 5% to 8% within the next 90 days after that. Yes, I'm planning on staying in this position potentially for 3 to 4 months. That's what a married put is. I'm planning on staying in this long term. It's not a 2-week out bull put credit spread that I use with 15% of my portfolio. It's not a shorter term collar spread that's 14 to 20 days out, standard collar with the same expiration that does have limited risk and a capped gain. That's used in a different portion of my portfolio. This is what I'm looking for. And about 68 to 70% of the time, the positions that I pull directly from this search after doing my further research and analysis, Jason, do exactly this. They move up 3 to 6% within the first 20 to 40 days, not necessarily follow up. That's different. But by this movement alone, I'm able to cut the initial at risk by half, if not more, have a very low risk position, still with the potential for unlimited upside and the potential to do different income methods. If we hit a black swan event and the market falls, I have income methods in the blueprint. I can handle that if I think it's an overreaction and I can recover. I'm still keeping single digit risk. I still have the benefit of the 13 different income methods in my favor. Why do I mention that I don't want to sell a naked put position or try to approach the married put, adapt the wheel strategy where you sell a naked put, hope to get assigned the stock. If not, it just expires and then you sell a new put and so on and so forth. But if it does get assigned, you convert it to a covered call, because at that point, you're still taking on 97, 95% risk of owning the stock outright. You've got to have a great stock selection process in order to make that work long term. But why am I not applying this to the married put approach, taking that part of the wheel and saying, oh, I'm going to sell a naked put. So MMYT is at 106. I'm going to sell the 100 strike put 1 month out And if I get assigned that I'm going to convert it to a married put, if it goes up to 116, well, I just make my 1.1%. I missed that other 10-point movement, 10% movement, a little bit less than that. Let's call it 8% movement. But if I was in the married put from the beginning, buying the stock at 106, buying the 115 put with a delta of 0.51, and the stock moved up 10 points, around 8% or so, 9%, I'd still be at a 4.5%, 5 or 6% profit to the upside. And that's occurring 68 to 70% of the time for me in this search. But yes, I do due diligence and I look for the positions that I want to see. Okay, so there's some other steps involved in that is discussed in the blueprint, Jason, what we look for to analyze the positions. Now, can I just do this against stocks in the S&P 500? Why use the list that I showed with this criteria? Can I just do this against NASDAQ stocks, NDX stocks in those situations? And when tech has been strong, why can't I use it against the Russell 2000 stocks and then looking against those lists or my own personal list? The answer is you can. Try to look for technicals. You saw that broad reach of technical indicators that we had on power options. And we're going to take a look at those right now as I clear up the drawings there. But different technicals. Why don't I use Bollinger Bands? Why don't I look for things that have dropped below the lower band or just had a recent Bollinger Band breakout? Why are you not using MACD for stocks that have recently had a MACD crossover that's showing strength in those cases, or a high RSI or a good range of RSI? Why aren't you using those? Well, you can. The idea of the married put is that we're looking for stocks that we feel are bullish and are going to move up 3 to 6% in the next 20, 40 days, and with the potential to move up another 5 to 8% in the 60 to 90 days following that. If that's what your anticipation is of stocks in NASDAQ, stocks in IWM, the Russell 2000, excuse me, then you can do that, or even the ETF itself. But let's go back here. And let's go back to, hold on a second here. I'm sorry. I want to go back to the Power Options main channel. Okay. And I want to search. There we go. Sorry, folks. Sorry if that played. There we go. All right. Okay. So sorry. I went back here, went back to the main homepage and looking at videos. And I'm going to search and I'm going to type in trust the search results. And we touch on it in this one. And I can't show the screenshot reel. Maybe I can if I go to it. And I'm going to stop it to make sure it doesn't start playing. There we go. Screenshot that we showed so we can see it in a better view. There it is. Here's why. Every 18 months or so, I know that's a weird number, but every year and a half or so, I go back. I use the back testing tools and Power Options. I keep the same married put criteria, Jason, of going at least 150 days out, stocks under $200, going no more than 20% in the money, keeping the risk between, let's say 3.5 to 8% or so. And that other basic criteria in the list we use as well. Run that back test. And every time I run it, now I know this is back to 2019. We've done other ones recently that we've shown for Blueprint Owners of Fusion subscribers. Using our radioactive defaults, we continue to see better returns over an 8-month, 5-month, 3-month, 6-month, or 9-month period than screening against NASDAQ 100 stocks, the S&P 5-star stocks, using technicals, looking for Bollinger Band breakouts or stocks above showing that MACD crossover. Dow 30 stocks. I mean, you can see here we had 11.1% return during this 8-month period from September 2018 to May of 2019. Double-digit returns on the default radioactive screen. Double-digit returns. This is just looking at the stock movement itself, not the stock and the put. But, and following that, going from January to May, that was the first question that was asked during the webinar, is a 21% return. And it beat consistently. And every time I run this screen, we see it beat consistently those other approaches. Still not a bad return. This is without income methods. This is without doing any adjustments, Jason. But this is typically what we see when we do these tests. Now, there have been time periods, of course, that raging QQQ time period during the AI boom. That 5 or 6 months period looking just against NASDAQ 100 stocks, because you were seeing NVIDIA come up on top, you were seeing AMD come up on top, you were seeing SMCI come up on top. Those stocks did beat over that 5 or 6 month period the standard radioactive screen. But this is consistently over time. That's why we stay with this criteria. That's why 95% of what Ernie and I post, as I mentioned, our trades in the radioactive trading portfolio at Fusion come specifically from this search with some other default criteria. Research and analysis and due diligence. But this is it. Now, I've given you essentially what you're looking at here is chapter 3, I think, and chapter 4 of the blueprint. What criteria to use, how to identify positions. Didn't really talk about which stock charts I look for, but that's the approach that we're looking for, Jason. You can find the married puts that we are going to use right here on the Power Options search. The rest of the description of what you're looking for inside that trade, the SIGA model for the 13 different income methods, the SIGA model for the married put trade itself, that's what's described in the full course, the blueprint. When would you do an income method? Why would you do an income method? Why would you choose one income method over the other? That's the further details. Let me go finish Sumner's questions. His quote, if you think a stock entity is going to increase 3 to 6% next 20 to 40 days, what if I have zero ability to make that assessment? Is there another metric to use to derive the 3 to 6%? No. You don't use, such as probability to close above or below? No. Or average true range? No. Unfortunately, we discuss it in the blueprint, what we look for. Okay, and we discuss what we're talking about with the married put approach, and some of those blueprint owners only webinars are our process for going through. I mentioned AEM. I sort of changed it to sort by risk. I'd probably want to use the 85 strike on this one for a higher risk than the 6%. But I'm interested in AEM. I'm interested in some of the mining stocks right now. Let me take a look at big charts. A few weeks ago, we had a presentation on this. Don't like this right now. Honestly, does it look like a good buy point to me? Yes. What am I looking at? Well, the stock had breached above the upper Bollinger Band here and has had a pullback as we'd expect. Now it's trading below the SMA 20. That's good. What I don't like here is this MACD line. I want to see this blue line start to curve up and hit the red line. And to me, that's going to be my buy point. Here was a good buy point with the MACD and the stock moving below the SMA 20 after a recent pullback. That's what I'm going to look for. We had discussions on that too in the chart reading discussion on YouTube. Remind me, let me go back. Let me just jot this down for you in a minute, Sumner. The chart reading one from 2 weeks ago that we had. What do I look for, not just for married puts, but when I'm looking to do an adjustment? If I start to see this trend in the negative and I was in a married put on AEM, I'm probably selling a call here expecting a pullback. Once the stock falls down here and I start to see this crossover again and moving back above the SMA 20, well, what I might have done here is roll down the put also, that second working asset, and now when it's come back up, I might have moved the put back up to again lower the risk. Same thing here. As it fell, sold a call, and this is discussed in the blueprint, the SIGA model for the 13 different income methods down here. Might have rolled down my put when I saw that crossover, knocked out, essentially averaging down the stock, but getting paid to do it instead of putting more money in the trade. And then taking this here, moving the put back up, definitely would have been bulletproof at this point with a hard profit. Seeing this here with that crossover discussion now, depending, maybe I'm at the 90 already or the 92 put. Do I roll back down to say the 85 here to average down, lower my cost basis, but get paid to do it, and then continue to ride the trade based on what was this decline, what happened and why. It's not earnings related, it's just market related. So right now, I'm looking at this, Sumner, and I'm saying, you know what? I don't like this as a married put just yet. I do like this stock. We had this break. This was probably the earnings break, by the way. It's trying to recover, but I'm waiting to see some other things here. Now, could you use ATR? Yes, Sumner. You see how I'm kind of reading the chart and what patterns I'm looking for me personally, what I use in the married put techniques personally. If you see something here and you say, hey, I use ATR and I see the same breaks Mike's talking about, but I just use different variables, that'd be the same approach. That'd be the same thing, Sumner, that you might want to consider in that scenario. That's just worked for me. You know, like I said, hoodoo and voodoo. Palantir, a little bit volatile, but let's take a look at her real quick. Oh, big break. Okay, so this had the big break. Yeah, this was probably related to earnings. I haven't been watching it that often, but you see what I kind of look for here. Where would my buy points be on this? Hey, I like this stock. It came up in the search, but hey, I'm seeing this, and I'm not sure if it's the right time. We have this dip here, and oh, right here. So maybe I missed the boat a little bit here, but here would have been a good buy point. Have some hesitation, still climbing back up. Have some hesitation. Hey, I might have been able to. I probably would have been able, if I got in here at 35, it looks like, probably would have had the 40 put. When the stock was up here, I probably would have moved up to the 45 put, cut my risk in half. At this point, it bled back down about 41. Probably wouldn't have rolled it down at that point. And then we had the spike up here. Whether that's earnings based or market based, I'm not sure. Okay. So those are the things I'm looking for. This one is a little bit of a shock right now. It's a little bit of a jump. Still might be a good married put position because it's showing a lot of strength. Just one more here. KKR, I like it. I do like it. It had a missed the bottom, missed the jump, but again, this is a lot related to the earnings that have been going on, and not even so much the earnings, but the election, the market cuts, and what we've seen in the last 3 days. We're seeing these jumps, which is great, but you kind of see what I'm looking for. There's a perfect example. Looking at a stock position that maybe even came up on the married put search. It came up here. Hey, I like it here. But then it starts to trail. But I see this. I see this bottom of the MACD, and I see the blue line crossing the red line and going up above the SMA 50. That is a strong buy point to me. Get into the position at around 121, 123, probably buying the 130 put. Within 30 to 60 days, stock's up at 135. What am I doing? I'm moving up to the 140 put. Still a little hesitation, but it's then coming back up. We're still within 30 to 60 days, right? And now we're back up to 145. Probably would have rolled the 140 up to the 150. I'm at bulletproof status here. Maybe sold a call in this lull. Doubt I would have done it here, but I sold a call maybe in this lull, maybe in this lull. But if this, I didn't have any calls sold. I'm going to be honest, guys. I didn't have any calls sold going into the election. I had puts on my positions. Some of them I had double puts, and I had extra SPY puts purchased because the VIX was too high priced going into the election, just in case. You never know. You always want to be safe, and that's what we're talking about here. So that's me personally. Ernie has his own ways. He likes to use the Bollinger Bands, and you can see that they're very similar. The trends he looks for with breakouts of a good, strong position. So, here to here, or topping up near the high here, from here to here, and here to here. But that's all, of course, discussed in the different webinars and in the blueprint as well. Okay, so that's what some of the things I look for. And again, I mentioned this 2 weeks ago in that chart reading webinar we did. Let me go back to our YouTube channel. My apologies. I want to take a look here at view your channel. I'm sorry. Our recent videos here. Take a look at this one. Go to the, I'm sorry. There it is, Sumner. I paused it. Go to the recent videos and go to preferred chart settings on power options for a little bit more discussion. And you can see just what I kind of reviewed there and what we're looking for.